Hi, welcome to this Chapter 4 snippet. This Chapter 4 snippet is going to be discussing how to create financial statements based off of the adjusted trial balance of any company. I've Googled this company, Printing Plus. Actually, I didn't Google the company. I just Googled adjusted trial balance and found this one. Okay, and then we're going to do our financial statements. So our first one we're going to do is our income statement, because that is the first one we always do. This says January 31st. 2019. Okay, could be any date, it's fine. So when we do our income statement, we're going to start off with our revenues first. And our adjusted trial balance is going to follow this format every single time. We're going to have our assets, our liabilities, equity, revenue, and expenses. So with our revenues, we're going to come over here and we're going to look and we're going to just list off our revenues expense. We have our revenues, interest, revenue, and service revenue. We have some wonky formats here going. Okay, so let's list off our interest revenue is $140, and then $10,100 for service revenue. And then we're going to come over here and say total revenues. And when we're creating these financial statements, we're ultimately pulling from every single account that's on this adjusted trial balance. So let's come over here, and before we do that, let's check these off. No, I don't want you. So we've done interest revenue, we've done service revenue. So now we're going to come over here and list our expenses. All right, I got some formatting issues with this spreadsheet. Supplies, expense, depreciation expense, equipment, salaries expense, and utility expense. Sorry, I am kind of a stickler about making this stuff look good and definitely making it spelled correctly. Definitely think I jacked something up. Utility, yeah. Yeah, let's check it for right now. Service, look at that. See, always check your work. Always check your work. Okay, supplies expense was 100. Depreciation was 75, 100, and 300. Okay, so then we're going to come over here, total expenses. We're going to just add these suckers up. You can create this model if you want. These are called models. What we do is we basically can do this. We'll leave a bunch of gaps so you can fill it in as you need it. Certainly something that's doable. Okay, if you're interested in doing that, you can follow this up, see what I'm doing, and it's not necessarily important right now. Total expenses, and then net income, loss. Okay, and then we're going to take our revenues minus expenses. Okay, and this is also what we're going to look at when we're transferring, when we're doing our closing entries. That's the amount we're moving over to the owner's capital account. Remember, because we've closed out our revenues and expenses and moved this over to the capital account. So let's go ahead and check off the ones we need to check off. We've done all of the expenses now. Sorry, my check mark ability is very limited. Now let's do our statement of owner's equity. We're going to come over here. We're going to start off with our beginning balance, which we really don't know based on this adjusted trial balance that there was any, whether this owner's capital account, since it's adjusted, we don't know if that means that there was an initial, that this was the first month or first year. We don't know if there was any owner contributions or if this was the beginning balance and no owner contributions. Since we don't have that information, then for my purposes, I don't care. I'm just going to say it was a zero beginning balance. I'm going to say owner's contribution was 20,000. And if I decided to put beginning balance of 20,000 and owner's contribution is zero, it's fine. Unless it specifically says something to that effect, I'm fine with it, okay? Income, whoops, we want net income, and I'm going to put in here loss. And we're going to just pull that from our income statement. And then, in some in some income statements, you're going to see a subtotal here, and it's fine. Let's go ahead and just do the subtotal. I don't have a problem with that. Oops. But you know what? I did it wrong again with that that line. Sorry, I meant it to be the bottom. I think what happens is I get up there and then somehow I like roll it or something. I don't know. Equals sum. There we go. Okay. So we've subtotaled it, and then we're going to go owners with alls. And that was $100. So we're going to reflect that as a negative amount on this. And then we're going to have ending balance. Remember, when we're communicating our financial statements, we are communicating to non-accountants. So we don't want this debits and credits and all that other stuff. We want to reflect exactly the math we're doing so that there's no questions about it. So we've done the owner's withdrawals. And while we have done the owner's capital, the owner's capital account is a permanent account. So we don't want to mess with that one right now because we're going to put it, and we want to make sure we put it over here on the balance sheet. So let's make our balance sheet. Start off with assets, and we're going to do the classified balance sheet. So we're going to do current assets. And then let's start listing our current assets. Which of these assets are going to be used up, or we could presumably assume could be used up within a 12-month period or within the accounting cycle? Cash, absolutely. Accounts receivable, you betcha. Interest receivable, yep. Supplies, yep. Equipment, no. Equipment is going to be property, plant, and equipment. So we're going to do this, booyah, and we're going to go total current assets. And then we're going to go ahead and bump these guys in one additional line. We'll put up all this, and I'm pulling this information from the adjusted trial balance. Oops, that's equipment. And what we want to do is we want to sum up all of these guys. And let's make this format look good, shall we? Always want to do this in a good way. Now notice we're just indenting these and using different columns to reflect subtotals and things like that. I am not reflecting that these are debits and this is a credit. I am not doing that, okay? We're not saying debits, credits. We're just saying cash had this balance, and all of these accounts added up together equals this. So we're going to come over here, and we have equipment. So we're going to go property, plant, and equipment. And we're going to not want that indented. I don't know why it does that. And then we're going to list equipment. And we're going to list, we want this at book value. So we're going to show the total cost of it. And then we're going to show less accumulated depreciation. And this actually should have been put over here. And we're going to show a subtraction of the accumulated depreciation of $75. And we're going to show a book value of this plus this. That is our book value. Let me go ahead and just make it to where we can see all of the word depreciation. And then we're going to add up our total assets. Okay, very good. So there's our total assets. Let's go ahead now. We're going to list our liabilities next. Liabilities, all right? And then we're going to do current liability. Oops, let's go liabilities. Let's come over here and check these off though first. We did cash, accounts receivable, interest receivable, supplies, equipment, and accumulated depreciation. So we have these three liabilities left: accounts payable, salaries payable, and unearned revenue. Ideally, we believe that we're going to collect all of those within a 24-month period. So we're going to say total. We're going to go ahead and indent that. So now we're going to list these current liabilities: accounts payable, salaries payable, and unearned revenue. All of those are current liabilities. Let's list those off individually. We have 500, 1,500, and 3,400. Total current liabilities also happens to be total liabilities. So you can even put total liabilities here and that's fine, okay? But if there were some longer term liabilities there, we would have a long-term liabilities section, but we don't, so we don't need it. And that concludes all of them except for our owner's capital account. We're going to check that off because we get that over here. So then we're going to put equity, and we're going to say owner's capital. I don't know why these do that. If any of you guys know why Excel does this, I would love to know. I feel like I'm a power user of Excel. I feel pretty comfortable with Excel, and I don't know why it just tries to say, oh, I think you want to do this. And then we're going to have total liabilities and equity. And if we did this right, this should match our assets, and it does, okay? So we can see here that these two match. That's how you do financial statements, okay, off of a trial balance. Trial balance is going to be the same every single time. It's going to be formatted the same way. Just maybe have different accounts. And that's all you got to worry about. So that's how you do financial statements from an adjusted trial balance. If you have any questions, please let me know. I'll be happy to go over those with you. Otherwise, good luck, and we'll see you guys in another video.